Welcome back, traders. This is the 8th video of our 10-part strategy series where I will reveal simple yet powerful strategies tailored towards trading the Nasdaq and the micro Nasdaq futures markets. Again, the best part of all of these strategies are that they're accessible to everyone, whether you're a complete beginner or a more seasoned trader. Watch as I reveal easy to follow trading methods that you can start using right away without wasting your time hunting for opportunities every single day. For my 8th strategy, I would like to run you through my morning liquidity run setup, which I like trading on either the micro or the Nasdaq, set on both a 5-minute and a 1-minute time frame. Now, what I basically want to see with the morning liquidity run is price making a directional move and then getting to some stage where it reverses to the downside. I want to trade that reversal after price breaks above a previous level. In this case, it could be a higher high. In this case, price moving upwards. And then you get immediately a reversal down to the downside. It could also be that price, for example, could break above a previous prominent high set a few days ago, or maybe a week ago or so forth. So it's really important to see where price is in relation to these levels. Like in this situation, price broke above a previous lower high and then reversed again to the downside. Again, just a drawing, but that's the basic principle that I want to use for the setup. It also needs to, and this is very important, that this reversal needs to happen between the 9 a.m. and 11 a.m. time marks. So basically giving you a 2-hour trade window where I want to see these reversals. Now to start off the day, I first go mark off the start of the day at the 0 hour and then draw another 2 vertical lines at 9 a.m. and 11 a.m. The start of the day, I like to color yellow, make it a little bit wider, and then go and figure out in relation to that start of the day, where's the overnight session high as price approaches the 9 a.m. mark, and where's the low of the overnight session. And this case, price was also very close to a previous day's lower high and a lower low. So now I want to see, again, during that time window, price move above either one of those levels, followed by immediate reversal. And that is the start of the actual setup. Right, now you can see on this day, all of these lines were drawn prior to price entering the 9 a.m. time window. And as soon as it did on the 5-minute, price proceeded to break above that first lower upper level and continued higher. And as soon as it broke above the upper level, it started stalling a little bit. And this is the time where I would then switch to my 1-minute time frame, which I use as my trade execution time frame. The other part of this puzzle or setup is that I then need to see a reversal. And one of the best ways to do that as well, and this is just following pure price action, is to see price reverse lower after a break of one of those levels that I marked off, followed by a break of previous price structure. In this case, price on the 1 minute was making higher highs, higher lows. So if price were to reverse lower and then break above a higher low, in this case, those red lines that I marked it was one closer to price and one a little bit further down. That would be another indication that price potentially getting ready to reverse to the downside. Right, so that is another piece of the setup. And on this day, you could actually see that price did break that higher low, further indicating that a reversal was potentially underway. Now, the next part, very importantly, I need to see a fair value gap that formed prior to price breaking that price structure. And these fair value gaps I'll then be using as my trade locations. Basically, fair value gaps are formed by a 3 candlestick formation where there's a gap between the first candle and the third candle. Quite often price will reverse back to these fair value gaps and they act as support and resistance, in my case potentially resistance, and then quite often they will see price move into it and get rejected from it, which makes it really good to use for your entry locations. Now preempting where my stop would be about 30 ticks or so above if I were to get in at the lower end of that lower fair value gap. And rather than not missing, a potential move to the downside, I decided I'm happy with the risk if price were to pull into the lower end of that lower fair value gap. And it wasn't long that I got filled with 6 contracts on the micro Nasdaq. Actually could have traded the E-mini as well in this case, 32 ticks not being too bad. I would have traded with 2 contracts then, but on the day I was set trading with the micro Nasdaq. So once filled, my stop went slightly above that most recent swing high. My first target for 3 contracts was at a 1-to-1 ratio, and decided to place my second target also for another 3 contracts at a 1-to-3 ratio. Right, you can actually see in this day, price actually moved into that higher fair value gap area. Went slightly above my entry, but eventually start moving downwards again. And as I like to do with most of my trades, once price actually reaches my first target, I then immediately proceed to reduce the risk on my remaining position by half. In this case, half was just slightly above that most recent swing low, which was a lower high. And I left my target in this situation at a 1-to-3, or my remaining target, and as price proceeded to the downside, I decided to trail above the most recent swing highs, in this case lower highs, as price moved downwards, basically using price structure to trail my stop. Once price came very close to my final target, I drastically reduced my risk on remaining position and eventually got stopped out. It wasn't the biggest trade in the world, but I think a really good example of how the morning liquidity run happens. This happens quite often during the 9 a.m. to 11 a.m. time frame. Again, very important that I see those occurrences happen during that time frame. If it happens after that time frame, I'm not interested in a trade. What this strategy does is that it forces you to be patient, focus, and as well as with those fair value gaps, help you get into really nice sweet spots and basically go long or short. Again, could be also done on the E-mini NASDAQ as well. One of my favorite strategies to follow. This one used only price action and fair value gaps as my entry locations. But it's also worth noting that you can work in volume here like I do during some of my classes, my live classes, as well as momentum divergence, to further help you determine if you're actually dealing with the initial stages of a reversal or not. And that's a wrap for today's 8th strategy video. If you want to see the remaining strategies in this series, then don't forget to subscribe to this channel and hit that notification bell. That way you'll never miss out on any of our upcoming videos. Also go check out our free indicator of the month club by clicking the link below in the description to get your hands on some of our very popular trading indicators. Thanks for watching, and until next time, happy trading.